It's working? All right. Well, let's dive on in. Whenever you restart it, we'll go.
Yep, go ahead. I think we are good to
Cool.
go.
All right, ladies and germs. Welcome to today's stream. You all know me. Um, so let's talk about Periscope today. That's the goal. So first of all, where can you find Periscope? So Periscope is obviously an add-on feature to Unusual Whales. If you guys don't have it, obviously highly recommend UW as a platform. Gives you access to a lot of great chat groups, in addition to just having a whole suite of resources that you can use to kind of really, really elevate your trading. I know that seems like a plug. I'm not paid by Unusual Whales, but I've been using it basically since they started. I'm probably one of the OGs. Um, it's been around for that long. It's yeah. And it's been amazing. It's a great community. That being said, let's talk about Periscope. So what Periscope is largely just a way of basically taking all of the order flow data for SPX specifically, which is obviously the index for what's by tracks, and organizing it in a visual format to kind of give you not only price action for the day, but break even targets as well as market maker positioning. Now, the way that I normally trade is that I like trading zero DTEs. I know a lot of people will caution you against it, and I think by and large, I think that sentiment is accurate. I think zero DTEs are pretty dangerous, or can be, have the potential to be. But the reason why I trade them is because I'm specifically trading SPX. I try to trade it on the day, provided I can identify a good trade. And I'm in and out usually within a couple of minutes of the trade either panning out or failing. And the reason I do that is because I try to minimize losses, especially in this day and age where volatility is so high and macro conditions change overnight where you largely have no power to reposition. Um, it's a great way for me to minimize my risk and to also take quick gains off the table and keep adding to my portfolio. So let's talk about what we're seeing here when we look at Periscope, and we'll dive into all of the settings. Then we'll talk about what these values mean. We'll talk about the Greeks. We'll talk about gamma, what the bars represent, and I'll go into everything. So if you guys have any questions, we'll try to hold it until the end, and then feel free to ask questions, and we'll dive on in. Um, First of all, can everybody see Periscope on their screens? Because I don't want to be talking about it if you guys can't see it.
I'm good to go.
All good? Okay, cool. Sweet. So, again, what you guys are looking at here for Periscope is the market maker exposures. So right now, up in the top corner, we obviously have the index spot price, its change on the day, and then a bunch of settings underneath. As we work left to right, we've obviously got our dates. From here, we can really only go backward, obviously, since we don't have data from the future yet. Hopefully one day we'll have predictive data, right? Palantir AI. So we have the date here. We have the time frames. These move in 10-minute increments. You can see it's from 8:50 to 9. It automatically updates for the most part if you check this little circular reset button here. So it'll automatically update with every 10-minute increment. It's not exactly on the 10 minutes. I've found that data usually trickles in on the 12-minute mark, so roughly 2 minutes after the next window opens. But this gives you a rough time frame, or a rough scale of how makers are changing their positions over a 10-minute time zone. With here, we have a feature that says highlight, right? What this largely does is it gives you a way of visualizing. Sorry, hold on, doggy Parker. It's okay, bud. Um, this largely gives you a way of visualizing market maker flips. So changes in positioning for market makers. Hopefully we get an example of this while we're on stream so I can show you guys what that means. But what this represents is market makers obviously either changing the directionality of their bets or repositioning in larger quantities, which may indicate stronger sentiment and more directionality. I keep the standard settings for market maker flips. So this is what's checked if you buy Periscope and you open it up for the first time. It'll largely look like this. But if you wanted more minute changes, we'll say like you wanted market maker changes less than or greater than 1000 or greater than 500, you could change this value and that would give you more up a more up close view of what positions are doing with every update. From here, we have the straddle. This largely tells you what break-even prices are expected to be for market maker positioning for zero DTE specifically. It does apply to other times or other expiries. Uh, I find it. I have a trading methodology that I use for it, and we'll talk about it later. But that being said, my methodology has come from observation, and I largely don't have a whole lot of science to back it up. So if it works for you, great. And we'll talk about it again later. But we'll move past that for a minute. Over here we have expiry, which just tells you the settlement time for the options that are being tracked. So you've got 1 day options, 2 day options, all the way out to God, you can as far out as they have options pretty much is what you can see. So all the way down to 2030. Again, I usually keep this on 0 DTE. I find that gives me the best representation of how market makers are positioned. Once you start going further out, you get a lot of, I will say, a lot of mixed messaging, and it becomes more difficult to discern flow. Again, DTE, this is just another way to filter by your data expiry. And then on the chart, we have it says chart right here. We have Greeks or positions. So the Greeks are obviously a representation of the positioning, whereas the positioning itself is the actual positions they're taking up. So when you change it to positions here, you can see that market makers are short calls here at 67.45. They are long calls at 67.40. Short puts here at 67.45 as well. So what this does is it tells you the actual positioning that goes with the Greeks, which are a representation of either gamma, Vanna, or charm. And we'll talk about the Greeks here pretty much right now. So for those who are first getting into options, and I apologize again if this is redundant or to people who have heard this before or know what they're doing, but what Greeks are a representation of how the value of options change under various parameters. So we'll talk about gamma first because gamma, by and large, is what's going to affect market movement the most. So what gamma is a measure of how much delta, which is the rate of change in the underlying, or the value of a contract in respect to the underlying of an so it's sorry, let me reword that so it's less confusing. Gamma measures how much delta, which is a hedge ratio, of an option changes as the underlying price moves. So I'll say that again. Gamma measures how much delta changes as the underlying price of the index moves. So we can break this down even more finely by saying positive gamma, which is largely held by option buyers. So positive gamma equates to long positions, long puts or long calls, means delta increases with upside moves and decreases with downside moves. What this means in a practical sense is that hedgers buy into weakness and sell into strength. What you can largely infer from any large positive gamma positioning is that market movements will be they will be suppressed. It will volatility will dampen in these areas. So what you'll see is you'll see market makers buy dips and sell rips. So As the market positions itself and moves towards positive gamma, you're going to see a stabilizing effect on price. That's not to say that price is going to go down or price is going to go up, but it's largely going to mean that price is going to revert to a mean somewhere within the bar. And largely, if it does push up, it's going to crab, and it's going to do so slowly. Now, going beyond this is that when you see negative gamma, which is typically held by option sellers or market makers who are short options, so that means sold calls and sold puts, it means delta decreases with upside moves and increases with downside moves. What this does is it forces hedging to basically sell into strength and to buy into weakness, which amplifies volatility. So as you see price, if price started moving towards negative gamma, and then we saw an increasing sell event, what this largely does is it increases selling pressure, which is why when you see price fall towards negative gamma, it will typically cut through levels very fast. All right. Everybody with me so far?
Yep,
We
hear
get
you loud and clear, Captain.
Yes, sir.
cool. Well, we can take. Oh, go
Yeah,
ahead.
let me know when you have a good like stopping point, like in the next 5-10 minutes, so I can just double check the video because I want to make sure that we're recording this and it's getting put onto the YouTube. So
Sure. If you want to take a pause now, I'll answer some questions on gamma before we proceed and keep talking about the rest.
let's do it.
Okay, cool, perfect. All right. Do you guys have any questions about gamma? So it's less of a plug on Unusual Whales and more just because shit's expensive these days, guys.
We're
Like,
good. We're good to keep going. By the way,
we're good to keep going?
yeah,
Perfect. Okay.
it's recording and everything's there. Everything looks good. So um,
Sweet. Wonderful. Any other questions on gamma before we keep pushing on?
I think that Unusual Whales is also going to start putting gamma for other stocks as well, not just SPX in the future, right? Not right now, at least in the future, which is actually going to be really cool to be able to monitor all those with gamma in real time. You know?
Yeah. Yeah, I mean, I think that would be great. I can't wait for that implementation because that'll largely give people more fine tuning more fine tuning and more control over the positions they take and where they can expect to get off the boat. Because I think that's one of the things that new option traders struggle with is where to take profit.
Yeah.
And yes, Swips, that's exactly why I'm a perma bear, because I love losing my money at one table of the casino instead of spreading it out over all the different tables. Ryan, to answer your question, I'm not trying to imply that green bars when tracking gamma necessarily mean not to expect a move. What I mean to say is that if you get a move, you are usually going to experience a more grindy move. So like more grinding to the upside or to the downside. You're going to experience less volatility, which means that if you are holding short dated options, like especially if you're trading zero DTEs, um, there's more of an expectation that you have higher risk because any movements that do happen are going to happen slower, which means theta is going to have a chance to eat at your inherent value. So usually what I like doing, and I'm putting the cart before the horse here when I'm talking about how I position and how I use this data, is I like waiting for critical levels. So yesterday, was it yesterday? No, it was Friday when we had that big move to the downside. We were trending right at 6720 or was it was it 6720 or 6820? I can't remember. But we were right there at that critical level that bulls really needed to hold in order to continue upside momentum. And we had a lot of negative gamma stacked to the downside just below the positive gamma bar we were sitting at. As soon as we cut through that positive gamma bar, we sold incredibly fast, and options value contracts or put contract values like skyrocketed because of the implied volatility increase, as well as the option itself going in the money. So with that being said, positive gamma doesn't mean there won't be a move. As you can see today with our positioning right now, we've kind of just been, other than this call spread that we had up here that we pushed through, we've been grinding through positive gamma levels pretty consistently. That being said, the moves have not been fast. So Positive gamma largely just means slower movement, whereas negative gamma means faster movement. Yes, volatility. Positive gamma suppresses volatility, but also causes reversion to a mean price, whereas negative gamma increases volatility as market makers hedge in the direction of price movement, which accelerates movements.
Speaking of volatility, a quick point I want to say is everybody's worried about time and contracts right now. My ATYR contracts I had were negative 98%, and now they're up 100% just now. So that's
Yes.
also a proponent of volatility. So
Yeah, and volatility is great, especially when you get those negative contracts. I know I pinned in the chat above people or a chart to kind of give people a general idea of what you need to recover once you're down a position. Um, as a general rule, I advocate for cutting at 40% of a loss. That being said, implied volatility does really help when you are down that much because if volatility does increase, you need less of a move to recover your gains. But that being said, that's something that you have to discover for yourself as far as your own personal risk tolerance. I'm just telling you what works for me.
yeah,
So we'll keep diving in with gamma here. But in addition to understanding how the bars affect these price movements, it's also important to understand what singularly large bars can mean, right? So generally, when we look at gamma and we see large positive gamma bars, um, large positive gamma generally has what you can colloquially know as a magnet effect, right? So positive gamma again, which typically comes about when options dealers are long gamma, they're either long puts or long calls, which if you're trading 0 DTEs and you come up here to the chart and you go to positions, you can actually discern for yourself, which is an awesome feature. So you can see here that at 67.60, market makers are long calls here at this level because you can see the call value is to the right and it shows you a positive value for calls. So when you are long a position and you have positive gamma, um, what that means is that as price rises or falls, dealers must either buy more in the case of price rising or sell more to hedge. Again, what this does is it dampens volatility and it pulls price towards that strike, which is what creates the magnet effect. So again, talking about positive gamma again creates that mean reverting force around large open interest strikes and spot price, which is why gamma typically gets pulled in one direction or another according to long positive gamma. So you see this long bar, you can see our price movement, and we've just been slowly being pulled directly towards it. Obviously, we've been pulled towards it slower through the positive gamma and faster through the negative gamma, as you can see. I don't know if you guys can see my cursor. Kind of, sort of, maybe.
yeah, I can see it.
You can see, yeah, you can see a lot faster of a movement here as we went through the negative gamma because that's where the volatility spiked and market makers hedged in the direction of movement. So they were hedging upward, buying, driving price up. And then here we have the mean reverting price, but we are still trending upward overall.
I think. Sorry, Bean has something he wants to add just real quickly.
Yeah, absolutely. Please.
Yeah, so I was reading this. I think I posted it, but Goldman Sachs. I read a lot of Goldman Sachs analysis, and J.P. Morgan and all those, and they were talking a little bit about like gamma and stuff.
Mhm.
Um, and they really had their levels at like 760 or whatever that level is, where they're most long.
Mhm.
Um, and their sentiment was really pointing in that direction, and the same as the opposite direction for bearish.
Yeah. Yeah.
So it really matters.
Yeah, it does. And being able to discern this for yourself largely gives you an indication of where markets want to move. I won't say where they're going to move, right? Because there's obviously a lot of factors that affect price movement, especially as we saw on Monday with the sell-off predicated by Oracle's news drop on the AI collapse, quote unquote. So that's not to say that markets are going to move there, but that is where the overall sentiment wants to drive markets.
It's an idea for sure.
Yeah, and I think I will say more often than not, it's usually correct. That's why I think, in addition to looking at Periscope, being able to discern where the Greeks are pointing you, as well as where positioning is telling you the market wants to go, having a good news bot is really important. Because if you see news that seems bearish or seems like shit's about to get bad, that may be an indication that come the next 10-minute update for Periscope, you might see a flip in sentiment.
For
So,
sure.
but yeah, so we talked about positive gamma and its magnet effects. Again, we'll talk about negative gamma. No, negative gamma doesn't necessarily have the same magnet effect. However, again, as we talked about earlier, once you start selling into negative gamma, you have amplified volatility, which drives price in the direction of price action movement faster. So if you have a large outstanding negative gamma bar in a sea of negative gamma, you can usually see price trend towards that direction. It doesn't have the same magnetic force that positive gamma does, but price will drive towards it. All right. Now, let's talk about some of the second order Greeks, which are less well understood, but do have an effect on price movement. And we'll talk about Vanna first, because Vanna is interesting, and it this is yeah, we'll just dive in here. So Vanna is a second order Greek, and what Vanna measures is it measures changes in delta with respect to volatility. So what we can interpret this to mean is, as implied volatility changes, delta changes, which will then cause market makers to have to adjust their hedges accordingly. So I'll give you guys a scenario. We'll say we are approaching the FOMC, right? IV is rising because we have pre-event fear. We don't know what JPOW is going to say. We don't know if they're going to indicate any rate cuts or what they're largely going to say about the environment. So what this is going to mean is IV is going to rise. As IV rises, the delta of out the money options increases because delta increases with IV. What this will drive market makers to do is buy more of the underlying to hedge, which can drive price up, which also you will see reflected in positive Vanna. Now, after JPOW gives his talk, he tells us the economy is on stable footing and labor is broadly in line with expectations and they don't see inflationary effects from tariffs. IV drops. Thus, the delta of out the money options decreases, and you can see market makers unwind their long hedges, which will increase selling pressure. Makes sense, right? It's pretty intuitive once you understand what Van is talking about, to see how that would drive price action as well. Now, charm is a little bit more complicated. Charm acts a lot like an accelerant, and what charm measures is it measures how delta changes with time. So charm is largely a measure of theta and its effect on delta. So as time passes, delta changes, even if price and volume don't move, which can cause market makers to adjust hedges proactively to reflect the decreased time and the likelihood of price action hitting certain strikes. So as time passes, especially near expiry, you'll see the delta of short-dated out-the-money options decay. Market makers will thus reduce their hedges, which can increase selling pressure if they're long gamma, because if they're long gamma, so we'll say they are long puts, you'll see them unwind those, which will increase their selling pressure. If they are short gamma, it will increase their buying pressure as they buy more of the underlying to basically remain delta neutral. This scenario, charm flows are particularly common on Mondays, which will lead to charm decay. So you'll see lots of unwinding of hedges. It's also I should say it's not just common on Monday, it's also common on Fridays as well. Um, so you'll see an unwinding of hedges placed just before expiry and before that expiry. So you can often see like charm rallies. So when you see on Fridays, like especially on pseudo DTE options, like for any of you guys that are like devout Tesla stands and you see Tesla go on those rippers on Fridays, it's usually as a result of charm rallies. You'll see market makers typically unwind their hedges, which will drive price pretty strongly in a direction, usually to the upside. All right. On any given day, is it simply the biggest bar on the board? Not necessarily, because the biggest bar on the board doesn't always correspond to positioning. Um, as a general rule, look for the biggest bar, because that can give you an idea of what the overall sentiment is. But I would generally recommend you hone your hone your viewing. Um, more precisely. I don't know if that makes sense. Hold on. Let me rephrase what I want to say. Um, identify the longest bar on the board. Uh, expect price to want to move there, but stay fluid and constantly assess market maker positioning because sometimes the the largest bar as far as Greeks are concerned doesn't necessarily equate to the largest positioning. All right, and we will move on. So now that we've basically broken down the Greeks, right? We can largely try to leverage these insights into helping us position. So, for any given day, we can open up our Periscope and we can take a look. We can go, okay, cool. What am I seeing right now? And how can I take a position? So let's track where we are now. Okay, so we bought back up to the positive gamma at 67.55, and now we're starting a little bit of a sell-off. We are at 67.49, right near the break even, with negative gamma below us. This looks like this was a call spread when it was above us. Let's see if positioning has changed to indicate that maybe now the spread has changed. So we got market makers who are short calls at 67.45 and long calls at 67.40. Now, sold calls usually have a stronger impact on price action, because dealers are on the short side. Dealers always want to make money. They always want to win. Um, Usually this is where you'll get gamma squeezes right in here. So if we continue to see selling pressure, we could sell back to the 67.40 area. But we'll just talk about how we can leverage these insights here. Go back to the Greeks here. Now, if I have a reasonable expectation that price is going to cut back into the break even and cut back to 67.40, I can see that 67.40 is good positive gamma support. Confirming that with positions, market makers are mostly long calls at this, which gives us a relatively stable price floor, which if I was feeling froggy, I could take a put position here at 67.50, try to get a relatively cheap entry, and then ride it down to 67.40, and that would be my take profit level, right around there. Now, what I additionally like doing is I said I'd talk about my straddle strategy here. Again, this is largely not founded in data because there are days where price doesn't necessarily respect the straddle or the cone. However, by and large, I will say most trading days seem to want to play within these levels. So you'll usually see price revision to somewhere within here, or rejection or support at these levels. So me, being the perma bear that I am, would largely like to see price back within the break-even cone around 67.45 to 67.40. So right here, I would take a put. And again, I would cut it at negative 40% because that's my personal risk tolerance. And I would hopefully catch the move down. If we advance back down into this negative gamma and we get some selling pressure, we could see it chop pretty fast, and then I would cut out. What would be the trigger for that put entry? Just price action? Large, yes. Oh no, why is Tuck a perma bear? I'm always a perma bear, Brad. I when it comes to macro conditions, I do not believe the AI hype. I am not on the AI hype train. That's just me. But for Marlin, what would be the trigger for that put entry? Just price action? It largely price action for me. Largely, again, you can look at the gamma positioning and you can look at the individual market maker positioning and try to get an idea of where market makers are positioned and what that expectation will do for price. So a lot of this is Periscope isn't necessarily spelled out for you, right? It's understanding what the Greeks and what the positioning means, and then making inferences based on that data. That is to say that this is not a system that will 100% guarantee profit, but more often than not, it will lead you to pretty consistent wins if you can leverage what you know. So you're thinking on both sides of the coin. Yes, so there is the duality of every position. I will largely say that usually, more often than not, when you look at the two sides of the coin between market makers and retail positioning, market makers fare better. So it's a lot like playing craps, right, at a poker table. The odds are never 50-50. But generally, when it comes to most table games, the house has an advantage. And it's the same way here. Market makers will usually have the advantage when it comes to making profit. So I would rather be on the market maker end of these trades than I would the retail end. That's just me. Everybody has their own view of this. I don't know if Wants is in here. He is not. But that's generally, by and large, how I utilize this data, is that I try to position myself in where market makers want to drive price and where price is currently trending, and try to capture at least some, if not all of the move, and then exit right at strong supportive levels. So for me, if we get a price revision back within the break even, a strong supportive level, at least for now, is this 67.40 level here. We could theoretically sell beyond that, but pretty unlikely, especially given how price action has been moving today. Okay. Does anybody have...
on a
Go ahead.
separate note, NTLA, I'm just about to link it out from our stream conversation earlier we had. We spoke about it, and NTLA is up 27% today.
There you go.
So
Heck yeah.
the 17.5 call is super duper in the money right now.
Good for you guys. All right. Does anybody have questions so far? Now is a good time to assess. You guys are all on board. It's made sense up to this point, and you guys can largely see what I'm seeing, and you can make some inferences here. B-Rads, type it. So is Swips. No. The answer is no, Swips.
You're going into wintertime, Swips. They're going into hibernation now.
Bears never win.
Are you starting your hibernation, Duck?
Yeah, I'm hibernating, dude. I'm honestly, this is obviously macro related and not supported by positioning yet so far, but it is not lost on me that the installment of the Fed Governor Moran corresponds with a government shutdown and a desire to drive market making decisions by the Federal Reserve away from key data points. Um, what I see or what I expect to happen is that if we don't get a resolution of the shutdown soon, we are going to be approaching the next open market committee without actionable data, which is going to leave the Fed in the unenviable position of trying to make forward-looking decisions with only past-looking data. And if we lose more reasonable Fed governors, especially with a loss of JPOW coming up next year, we could see a very real hyperinflatory scenario or situation. I'm worried. I'm worried going into the future if we do get more rate cuts, what that's going to mean for the American consumer. So I remain long-term bearish, short-term bullish.
I would just
But
like to add for everyone to remember the history books and remember what happened pre-Volcker era in the what was it, 70s, right? When they didn't go through with stamping out inflation. It came back to like what 20% or something like that.
yeah, I mean, you can even look at, pre or post Treaty of Versailles Germany, right? The Weimar Republic and people literally using 20,000 marks to buy a loaf of bread or burning the money because the money had more value for creating heat than it did actual currency. Um, the dollar has lost 11% of its value in the past year. That's been almost entirely by design to try to stimulate foreign governments into spending in America, but tariffs have a way of then driving those businesses. I mean, people aren't going to flock to the US just because the dollar is cheaper if tariffs are going to make producing in the country exceptionally expensive. Businesses are in the business of making money, not spending it, as a general rule, with the exception of all the AI companies and their capex spending. Uh, so we have this push-pull dynamic within the larger government, which, again, the way this administration is treating foreign investment right now, it leaves a sour taste in the mouth, and I don't think companies are going to be incentivized to want to invest, spend, or build here, um, especially with ICE on the prowl. But that's beside the point. Well, again, my bias is going into the next open market committee's bearish sentiment, especially if we have no data and this shutdown persists. But any more questions, guys? I want to answer all your questions to the best of my ability. I want you guys to all make money. I don't make money if you make money, but I do feel good about it. Like, I want you guys to win, because I think it's incredibly unfair that for the longest time these tools were largely only available to institutional traders or people that had the funds to buy them. So now that they are available to all of us, I highly encourage everybody to study them. And if they make sense for you and you can use them, awesome. Like, that's a huge plus for me. Huge boon. All right, let's see. Well, yeah, I mean the USD being down right now, right, is also a function of lack of confidence in the ability for the American government to pay back or make good on their debts. Right? That's why we're seeing bonds also rip too. Um, it's a macro economic perfect storm when it comes to headwinds. It's just a matter of time when it all unwinds. I'm not saying it's going to unwind anytime soon or even within the next year or a couple years, but it will at some point. It has to. Oh, of course, I'm on the side of retail. I am retail.
Yeah, Brad is
Are
the
there game-
market maker in here right now.
yeah, Brad and Mowgli.
Yeah, we're the two market makers.
Are there gamma values that give you more confidence, or would you say more context or more context compared to other levels near or around price? Any gamma values that catch your eye when looking at Periscope? So again, it largely comes down to pattern recognition, um, because gamma updates at 10-minute intervals, right? What could be initially small bars can grow over time, which can lead to increasing confidence that the market's going to pick a direction and soon and lead price towards that position. Um, honestly, I mean, right now, again, I'm looking for a reversion back to 6740. I want us back within the break even because we're kind of trending along it. We've got negative gamma below us, and we're in a little bit of a downtrend. That being said, there's not like one specific value that I would look at that'd be like, oh, this bar has, we're at a negative gamma value of, I don't know, what is this? 12,000. Like that's a sure thing. Not necessarily so. Um, no, I'm not necessarily associated with the numbers, like the specific value of the gamma. Again, if gamma is growing, that's usually a sign of additional participants piling into that position, and that's where you go to the position value on the chart. Sorry, here we go. The position value, and if the position value is also growing in a way that corresponds to the gamma changing, that can indicate that there is increasing sentiment that price will trend towards that direction. Does that answer your question a little bit, Zigford? I know it's kind of a circuitous way of trying to explain it, but again, there's no hard and fast number. Like as with anything, there's no certainty in trading. Um, so I don't necessarily look at a specific number to guarantee that I take a trade. I look at the whole picture. What is the whole picture telling me right now? We Going back to this for a more practical real world, we approached our positive gamma cluster up here. We chopped within it. We had a pretty convincing bounce off that level. We advanced towards negative gamma, and now we are selling through the negative gamma, which, as we know what negative gamma does, it amplifies by increasing hedging in the direction of market movement. Through that, back towards the break even, towards a price floor at 6740. So that's a more practical way of taking the insights that we've talked about here, applying them, and building a picture of what we think. Yeah, no. I don't personally think so. Other people may have a different perception of that, but that's how I use it. And again, I'm not an expert by any means. Like everybody else in here, I I am self-taught. I've learned by using Periscope since it was released and by constantly looking over the data both during market hours and after market hours and trying to see if there was, you know, a better way of identifying largely, because bias is a real thing, right? Like it's very easy after the fact to go, oh yeah, of course price would move there. A lot harder to identify it during the moment. So what I largely try to do is, I mean, Swips can attest to this, right? Well, he'll message me and I'll talk about where I think price will go, based on what I see, and I keep a log of all the times I'm right and all the times I'm wrong. And when I'm wrong, I go back and I try to reassess, okay, well, what was there that may have indicated that there was a different position I should have taken. And I will study. If there was nothing there, then there was nothing I could do. But if I go back and I look at the data again and I compare everything that I can look, or everything that I can find, um, usually there's something that I'm missing, and it could be really, really small. It could be large. It could just be a bias thing, like a cognitive bias, like, oh, I want it to go down because I think this headline theoretically or this headline realistically should be bearish. But sometimes the markets can remain irrational. Not even sometimes, all the time. All the time the market will remain irrational. Yeah. Again, I love the cone and the break even. I don't, as I've talked about before, I don't know if you guys saw the messages. They were a couple of days ago where I talked to Nick about what positioning or what the cones signify. Again, I found that the cones are usually supportive or resistive of price movement on the day. That is to say, that's not always the case. We've had several days in the past weeks where prices just shot out of the cone and broke even, and then trended above it or below it all day. Um, but more often than not, price usually ends up respecting one of the two straddles for reasons that are beyond my comprehension. And so when we usually break back through, usually when we test the break even, we will rise above it and then swiftly cut back through. So now that we are back through the break even, again, I am more convinced now than ever that we will see a reversion back to this price level of 67.40. So even if you waited till here and you had the dry powder, once you saw us constantly retesting that break even, that would have been a good place to take some zero DTE puts and try to ride the wave down. All right. That's largely how I use Periscope, guys. Again, this isn't an exact science. This is just trying to use the data that I'm given through a tool and use it with other tools that I also have in addition to Unusual Whales Suite. So like, net flow, net call premium, net put premium, tracking all that stuff to try to build a confluence of data that can suggest a direction that can help me position myself accordingly. Any final questions before we all panic as we get the tiniest of red candles?
Bears are getting little tiny pieces of fruit right here
Yeah,
to
yeah.
eat.
This is yeah, exactly. I'm nibbling on some berries.
Yeah, some little raspberries and blueberries.
That's it, dude. Do I use the delta flow to the red market exposures? I haven't used it all that often, at least not through Periscope. I generally use the delta flow through the Unusual Whales app. So I'm an ADHD trader, dude. I mean, I don't have multiple screens, but I do have my laptop and my phone, so I usually open them up simultaneously. Um, this is just another way of, yeah. This is just another way of visualizing the data that you get through market maker exposures, right? So this is just showing us that we've got a lot of negative delta here, which means hedging in what direction, guys? That's okay. No pop quizzes. I'm kidding. I don't use it all that much, Brad. That is not to say that it doesn't have merit. It does. I just find that the visualizations through net flow through the Unusual Whales app usually give me a better way or a better insight of kind of confirming what my bias is, or what position to take as a consequence of how easy it is to read. Especially when you're trying to make decisions in a really rapid, fast-paced environment. I don't know about you guys, but sometimes I can trip myself up looking at, trying to decipher or remember in my head what negative delta means and its implications on price action, or positive delta and what its implications on price action are, and how that will affect market maker positioning. I just like looking at funny lines on a graph, and the lines go up. That means net call premium is increasing, and if the lines go down, net put premium, or and then the line that green line goes down, net call premium is decreasing, and that's an easier way of visualizing what I know intuitively. So, but yeah, we're getting some nice price action trending downward,
What time is this
which is
FOMC meeting at?
Kalash wrote it in the group. I actually don't no, which is funny because normally I try to keep track of all the FOMC stuff. Uh, was the answer quiz hedging downwards? Was the quiz answer?
I can't even remember the quiz question. Did you ask a quiz question?
I was joking. I was like, oh,
Oh,
okay, so if we have lots of net, hold on, lots of net negative delta flow, what does that cause?
it causes my brain to hurt.
Yeah, exactly. See, that's largely why I don't use the
Delta.
delta flow because
Yeah.
I have to think about what it means, and in a fast-paced environment, that can sometimes
No, especially with ODTs
be
and
messy.
SPX, you want to be quick.
Yeah, yeah, exactly. So net, God, hold on. Now I'm gonna fuck myself up trying to think about it. Hold on. Let me give you a I'm trying to think about it too. I'm trying to contextualize it. So if they are, God, yeah, I'm gorked out now, dude. Get some coffee here. So,
Grok is
so
pretty decent.
negative, yes, negative delta price moves against the underlying. So you would have market makers who are either positioned in long puts or short calls. So how you would hedge is if you were short those calls, assuming it moves against you, you would have to buy back, which would drive price up. And if you were long puts, it would be a function of negative gamma. No, it would be a function of positive gamma because it's suppressive. It moves against the direction of the movement. Okay, yes. Negative delta would be positive, would be a function of positive gamma creating suppressive movements, theoretically. Martian, in your experience, how often is does this understanding hold true? The understanding for what specifically, Martian? If you can tell me or give me a more concrete of concrete example of what you're talking about, I can hopefully point you in the right direction. My goal is to always to help you guys reach the answers, even if I don't necessarily know them. The price range hit. Um, more often, I would say more often than not. More often than not, does price usually hit the established levels. For this, if we go back to the day's range here, right? We're again testing the break even, kind of buying up again, but we're seeing right here this purple bar again. If we look at highlights, that means market makers are unwinding their long gamma at 6760. They were previously long calls at this position, which means they are exiting those long calls, which creates less of a magnet effect to the upside. So again, not always. These aren't hard and fast rules. I would more often than not expect us at some point in the day to come down here towards that 6740 level. That being said, that movement could have been what we saw right here, and we could just bounce back up into range, and we could see in the next 10 minutes market makers reposition again to capture some more upside. But that is my bias. Any more questions, boys? Everybody in here in chat.
Yeah, please ask away. Ask
Yeah, like
ask away.
yeah, there are no dumb questions. If there's something that I didn't explain fully or didn't explain to your satisfaction, please speak up.
So,
I'm
unknown said something on the jungle. He said, "I'd be careful for anyone trying to long, ES spy here. Aggressive positive delta buyers during these highs, while price action is diverging, indicating potential trapped buyers." So,
yes. Yeah, it could very well be too. Uh, I mean, especially as you're seeing people unwind, right? Like these long calls right here could be market makers unwinding either. Well, it depends on when they bought them, obviously, which we don't have access to through Periscope.
Yeah.
But they could be unwinding for a loss with the expectation that the market does make a turn.
Yep.
Um, so just keep that in mind. There's a lot to consider, obviously, when you're looking at Periscope, and we can really only make inferences based on the data we have, and we can pick a direction and we can try to gain some insights. And sometimes we're wrong, and that's when we go back to the drawing board and we reassess and we talk about, well, was there anything else that could have been suggestive of something different? And if there is, then we try to incorporate that into the next time we trade. And that's why proper risk management is so important.
Yeah, I'm gonna post something here too for flow. I just saw this pop up while I was going through screeners. Or 121960. If anybody want to take a look at that, they're up to them as well.
They've been in those. They were in March of 2026 leaps
Yeah,
for those.
yeah. Seems like
Uh,
they hit a high on September 23rd. They hit a high of like 1.04. Right now they're at like a 0.65. So I mean, this is the bulk of the buy over here. Seems like your volume 30-day average is also really high for the day. So looks interesting overall. So you got some time on this. The contract 6% of the money. It has run 4% today, but I'm guessing there's more potential to run. I think this is a technology company. Wasn't this a cannabis company before?
No, it's a like a car. I think like what
Automotive
is it
thing,
called?
yeah,
Self-driving car company.
yeah, yeah. They're
Anyways,
they're
they
yeah,
don't care about like these small moves. I want to make myself clear on this. I'm not trying to be like mean or anything. It's just like they don't care about like these like tiny little dips. Like a 2% move is nothing to them when they're holding for this long.
yeah.
yeah, agreed.
Beans unhinged today.
Oh my god, I was freaking out earlier.
Beans,
Beans is cooked, dude.
beans. He was
Grilling
cooking.
beans.
He
Yeah,
was
he's
grilling,
grilling beans
yeah,
today,
on the
dude.
campfire stove. Man was going crazy.
Yeah. No, yeah. So hopefully that guys gave you a better breakdown and more in-depth talk about like what we're looking at, what these bars mean, how to relay that information into a way that makes sense. We can see, yeah, now we're getting further repositioning here. So you can see market makers are again buying back to 67.55. They're going long gamma here again, so that bar is growing. So yeah, again, this is all variable and things change. So the most important thing is to remain fluid. But gold's on a legendary run right now, and that should inspire no confidence in anybody for long equities for long equities for the most part, right?
Yeah.
Um, I don't know how well versed you guys all are in history. I would assume most of us are because if you're largely day trading stocks, you're probably autistic as fuck like me. Um, but usually every
Put
time
them all
gold
and everything.
has gone on a historic run, right? It's been preceded by a change in the world order. So what that means for us, I don't know what to say. But just saying, gold went on a historic run right before the fall of Rome. So
Jeez.
could mean anything. Could mean nothing.
Oh
Just
my
keep it in
god.
mind. It's a lack of what it means is it's a lack of confidence, right? When people buy gold, it means they're less confident in the market's ability to make them money and that there is less safety not only in equities but also in government bonds, the government's ability to pay back their obligations. So
Yeah, that's true.
read into that what you will, but yeah, there's a reason why gold's running.
Yeah.
Cypher just showed up on pre-FAFO.
Cypher is it's going crazy right now.
Brad, get on this.
Brad,
Yeah.
it's probably Brad that's buying the contract for it to go up to where it is.
There's a few. Oh, one just disappeared, but now there's two. There was three, but now there's two.
All right. Any more questions for Duck? Anybody have anything else about Periscope? Anything that just ask? Even if it's like, even if you guys think it's a stupid question, there's no stupid question. Just ask.
Yeah.
That's my recommendation.
You are also free to ask questions not about Periscope if
Yeah,
you just want
anything.
to.
Yeah, if you want to
For
ask
people who
anything.
don't know who I am and want to know who I am or how I got here, like I'm also happy to answer personal questions, like whatever you guys got, just throw it at me. I'm here.
Should I buy?
Okay.
Always.
Not
Always, dude.
financial advice. Nothing financial advice wise.
He
Always
said no
buy.
stupid questions.
Always
What's
buy.
your social security number and your pet's name? 5, 4, no.
Yeah. Yeah. Is my girlfriend cheating on me? Yeah.
Yeah, probably.
Yeah. Ryan, I'm in California. West Coast, Best Coast, baby.
I don't know about that one, man.
The West Coast is kind of falling apart.
I don't know about
it's yeah, they say that. You just gotta go to different places, dude. Like the coast is cool and all, but I'm a mountain boy at heart, dude. I most of my days and weekends I spend in Mammoth. I'm either fishing or I'm up there camping, and Mammoth is beautiful. Like
Yeah.
if you've never been to Mammoth, go to Mammoth for sure.
Oh,
So
hot
a
spring.
while ago I went to San Francisco.
Mhm.
Like we landed in the San Jose airport, and
Mhm.
right as we got outside, there was a fire.
Yeah. Oh yeah. Well, that's California where we always
Yeah.
burn.
It was like that quickly.
Yeah. Yeah, that's California for you. Yeah, yeah. Scepter, Mammoth Lakes. Yep, that place is rad. Owens River Valley, amazing fly fishing. Although the brown trout there are like overfished. So if you're trying to fly fish out there, good luck. They're incredibly smart. But
It's
there's
like the
some
Delaware over here. God, man, that's so
yeah,
smart.
but there's some alpine lakes in that same area. Like literally you go to the Eastern Sierras right there, and there's multiple trails there's multiple places to hike off the 395 that can lead you up to some really, really sweet alpine lakes. Hilton Lakes has great rainbows. Great rainbows. Yeah. So highly recommend. Good time for autumn.
RGTI, new change coming in.
What could
And
happen in the world to turn you into a long-term bull? Um, Trump outlaws selling. Trump makes it illegal to sell or un-American. No, I mean, here, I guess let me add some more nuance to my position, right? Like, I am short-term bull, longer short-term bear, and then longer than that back to bull. I think like within the next 3 to 5 years, we're going to see at some point uh a change in the status quo in these investments. Like I don't know how these AI companies can sustain or largely support um the trillions of dollars in capex that they're spending in companies that largely don't produce revenue and in amounts larger than the GDPs of most developed nations in the world. Uh, I just I don't get it. I fundamentally don't get it. I guess to some degree fundamentals don't matter, but they do. Like in larger terms, there's almost always a reversion to reasonable PEs. Like every time, what is it? The S&P has breached what is it? A forward PE of isn't it roughly around 27? It generally corrects. So we're like we're we're sitting at that level, and we have been for some time, but we largely haven't seen a meaningful correction in equities pricing. So I would think that over the longer term, we do see some corrective measures in the market outside from Liberation Day, because I think that was more of a one-off and a reaction to tariffs, which is why we bought back up. Um, but I will say that, like, if you go 30 years, 40 years, 50 years out, yeah, we're going to keep buying. I mean, the world's not going to end until it ends, but I will be long dead before that point happens. Hopefully.
If there is no more question on Periscope, I'm just gonna stop recording so I can start editing it so I can put it up on there.
Yep.
So let me do that right now. So it won't be recording. Maybe Brad will want to speak now because it's not recording anymore.